Welcome to Bitcoin's Big Moment, the Halving Countdown. I'm your host, Aria, and today we have two incredible guests joining us to discuss the upcoming Bitcoin halving event. Get ready for an insightful conversation filled with expert analysis and predictions on how this event will shape the future of cryptocurrency and the financial markets. Let's dive in. First things first, Luna, can you give us a quick rundown on what Bitcoin halving is for our listeners who might be new to the concept?
Absolutely, Aria. Bitcoin halving is a process that occurs approximately every 4 years, or more specifically, every 210,000 blocks mined. It cuts the reward for mining new blocks in half, reducing the rate at which new Bitcoins are created. This event is significant because it directly impacts Bitcoin's inflation rate and supply.
That's right, Luna. And it's not just about reducing the supply of new Bitcoins. This process is designed to mimic the scarcity and deflationary characteristics of precious metals like gold. It's a fundamental aspect of Bitcoin that ensures its value proposition as a digital store of value over time.
Fascinating. So with this scarcity mechanism in place, what has been the historical impact of previous halvings on the price of Bitcoin?
Historically, Bitcoin has experienced significant price increases in the months leading up to and following a halving. For example, the 2016 halving saw Bitcoin's price rise from around $650 to nearly $20,000 by the end of 2017. It's not an immediate effect, but the reduced supply, coupled with steady or increasing demand, tends to drive the price up.
Exactly, Luna. But it's also crucial to understand that while historical trends can provide some insight, the cryptocurrency market is highly volatile and influenced by numerous factors. So, while halvings have been bullish events in the past, it's not a guaranteed outcome.
That makes sense. Speculation surely plays a huge role in the market dynamics. Speaking of which, how do you both think the upcoming halving will affect investor behavior? Are we expecting a surge in speculative trading, or will this be a more subdued event?
That's the million-dollar question, Aria. Given the increasing institutional interest in Bitcoin and the broader cryptocurrency market, this halving could see a mix of speculative trading and strategic long-term investment. The awareness and anticipation of the halving have grown significantly, which might soften the immediate price impact, but strengthen long-term valuation.
I agree with Luna. And I'd add that the narrative around Bitcoin as digital gold has gained substantial traction, especially in times of economic uncertainty. Investors might view the halving as a reinforcement of Bitcoin's scarcity and appeal as an investment, influencing both retail and institutional participation.
So the halving could serve as a catalyst for Bitcoin's adoption and recognition as a legitimate financial asset. This event is not just about the technical aspects of mining rewards, but also the broader implications for Bitcoin's status in the financial world.
Absolutely, Aria. And let's not overlook the potential impact on the mining community itself. As rewards are halved, the profitability of mining Bitcoin becomes an even more critical question. How this affects miners' decisions to continue or cease operations could have a cascading effect on the network's security and, by extension, Bitcoin's valuation.
That's a great point, Luna. The cost of mining, in terms of both the hardware and the immense amount of electricity required, can't be ignored. Post-halving, only the most efficient miners with access to cheap electricity will likely remain competitive. This could lead to further centralization of mining operations, which is a hotly debated topic within the community.
Could this centralization potentially threaten the decentralized ethos of Bitcoin? After all, one of Bitcoin's most appealing characteristics is its decentralized nature.
It's a valid concern, Aria. While Bitcoin's protocol is designed to adjust the difficulty of mining to ensure regular block times regardless of total computational power, significant centralization could introduce vulnerabilities. For instance, if a small number of entities control the majority of mining power, they could potentially collude to influence the network, although such an attack would be highly risky and costly.
True, and to build on that, the resilience of Bitcoin's network to date has been remarkable. The decentralized consensus mechanism has withstood numerous challenges. Plus, the incentive structure of Bitcoin is designed to discourage such behavior, as undermining the network would likely devalue the attacker's own holdings.
It's a fascinating balancing act between technology, economics, and human behavior. The coming halving will indeed be a significant moment for Bitcoin, providing fresh data on how these dynamics play out in the real world.
Exactly, Arya. And let's not forget the psychological aspect of the halving event. Historically, each halving has led to speculative excitement and significant price volatility in the short term. Investors and traders closely watch these events, often leading to a self-fulfilling prophecy where anticipation of price increases drives actual increases.
That's a key insight, Luna. This speculative excitement, while contributing to volatility, also increases Bitcoin's visibility and can attract new participants to the market. It's a double-edged sword that can lead to wider adoption, but also exposes investors to higher risks.
Speaking of risks, how do you both see the regulatory landscape evolving in response to these developments? Could tighter regulations be on the horizon, especially if Bitcoin continues to gain traction as a mainstream investment vehicle?
Regulatory scrutiny is almost a given as Bitcoin and cryptocurrencies more broadly step into the limelight. However, it's not necessarily a bad thing. Clear regulations can provide a framework for safer investments and could help weed out fraudulent activities within the crypto space, ultimately fostering a healthier ecosystem.
I agree, Luna. Regulations can serve as a bridge between traditional financial systems and the emerging crypto economy. They can help integrate cryptocurrencies into everyday financial activities, making them more accessible and trustworthy for the average person.
So in a way, the halving event and the surrounding activities could accelerate the maturation of Bitcoin and cryptocurrencies, pushing them towards a future where they are part of the broader financial landscape, not just a niche or speculative asset.
Absolutely, Arya. The halving serves as a catalyst for broader conversations about the role of cryptocurrencies in our financial systems. It's a reminder of Bitcoin's innovative approach to scarcity and monetary policy, something that traditional currencies don't have.
And let's not overlook the technical side of things. Every halving event reduces the reward for mining new blocks, which in turn affects the miner's motivations and the network's security. It's a complex balance, ensuring that Bitcoin remains secure while adjusting to reduced rewards.
That brings up an interesting point about the sustainability of mining. As rewards diminish, will we see a shift in the mining landscape, maybe towards more sustainable practices or even technological innovations in mining hardware?
It's highly likely, Arya, the need for efficiency will push the development of more advanced and less energy-intensive mining hardware. We're already seeing a shift towards renewable energy sources among some of the larger mining operations. This trend will likely continue as the industry evolves.
And this evolution could further solidify Bitcoin's position in the market. As it becomes more sustainable and efficient, the barriers to entry for new miners could increase, leading to a more mature and possibly more centralized mining landscape.
Does that centralization pose a risk to Bitcoin's decentralized ethos, though? How do we balance efficiency and sustainability with maintaining a decentralized network?
That's the million-dollar question, isn't it? Decentralization is a core principle of Bitcoin, but as the network grows and evolves, finding that balance will be key. It may require new innovations in blockchain technology or novel approaches to network participation.
Indeed, the future of Bitcoin and cryptocurrencies in general will be shaped by how we navigate these challenges. The halving is just one piece of the puzzle, but it's a significant one that highlights both the potential and the hurdles ahead.
Speaking of hurdles, let's not forget the regulatory landscape. With the halving drawing more attention to Bitcoin, do we expect any shifts in how governments and financial authorities view and regulate cryptocurrencies?
Absolutely, Arya. Regulatory response is a critical factor that could either stifle or encourage the growth of Bitcoin. Historically, we've seen varied responses from different countries. Some have embraced cryptocurrencies, while others have imposed strict regulations. The halving event, by highlighting Bitcoin's growing prominence, could push for clearer and possibly more favorable regulations.
And yet, the challenge remains on how to regulate without undermining the very principles that make Bitcoin unique. It's a fine line to walk, and the halving event throws this into sharper relief. Governments will need to innovate in their regulatory approaches, much like the technology they're seeking to regulate.
Innovation in regulation. That's an intriguing concept. Do you think current financial institutions could play a role in shaping this regulatory future?
They could, and in some cases, they already are. Financial institutions are starting to realize the potential of cryptocurrencies and blockchain technology. Their involvement could help bridge the gap between traditional finance and the crypto world, potentially leading to more nuanced and practical regulatory frameworks.
But let's not underestimate the power of community and grassroots movements either. The crypto community is highly engaged and could play a significant role in advocating for fair and effective regulations. After all, Bitcoin itself was born out of a desire for financial autonomy and decentralization.
It seems like the halving is just the beginning of a much larger conversation about the future of finance, technology, and governance.
Precisely, Area. The halving puts a spotlight on Bitcoin's scalability and sustainability issues. As we move forward, the conversation isn't just about regulation or technology alone. It's about how these elements interact with societal needs and environmental concerns.
Speaking of environmental concerns, let's circle back to the initial point about miners needing to find more energy-efficient ways to mine Bitcoin post-halving. This necessity could actually accelerate the adoption of green mining technologies.
That's an optimistic view. Do you think the industry is ready to make such a significant shift? Historically, crypto mining has been criticized for its high energy consumption.
The industry may not have much choice. With the reward halving, profitability is directly impacted. Miners are incentivized to seek out not only cheaper but also more sustainable energy sources to maintain their operations. This might push the entire industry towards a much-needed greener path.
And let's not forget, innovation often comes from necessity. The constraints post-halving could lead to breakthroughs in both mining technology and the way we think about energy consumption in the digital age.
That would certainly be a silver lining. It sounds like the halving could be a catalyst for change in more ways than one.
Absolutely, and it's not just about the technology itself, but also about how it intersects with global economic trends. For instance, as digital currencies become more mainstream, they might influence how we approach issues like international remittances and financial inclusion.
True, the potential for cryptocurrencies to offer solutions to real-world problems is immense. The key will be balancing innovation with regulation, sustainability, and social impact. The halving event is just one chapter in this ongoing narrative.
It seems like we're standing at the crossroads of a financial revolution. The decisions made now, in the wake of events like the halving, could shape the future of not just cryptocurrencies, but global economics at large.
Speaking of shaping the future, let's not overlook the impact of the stock-to-flow model on Bitcoin's perceived value. The halving events are integral to this model, suggesting that as the rate of new Bitcoins entering the market decreases, assuming demand remains constant or increases, the price should theoretically rise.
Yes, that's a fundamental aspect of Bitcoin's economic design, but we also have to consider market psychology. Investors' anticipation of the halving and their reactions to it can be as influential on the price as the halving event itself.
That's an interesting point, Ethan. So you're saying the mere expectation of scarcity can drive the market as much as the actual reduction in supply?
Exactly, Arya. It's a complex interplay of supply, demand, and human psychology. Historical data shows significant price movements around halving events, but attributing those solely to changes in supply ignores the broader market dynamics.
And this is where the stock-to-flow model gets really fascinating. While it is not without its critics, it has been surprisingly accurate in predicting Bitcoin's price trends over time. This lends it a certain credibility and influences investor behavior.
It's almost like a self-fulfilling prophecy then. If enough people believe in the model's predictions and act accordingly, they could contribute to making those predictions come true.
That's one way to look at it, but we also need to be cautious. Financial markets are notoriously unpredictable, and cryptocurrencies even more so. While models like stock-to-flow provide a useful framework, they're not infallible. External factors such as regulatory changes or macroeconomic trends can dramatically sway the market.
Right, the broader economic environment plays a crucial role. The COVID-19 pandemic, for example, has shown how external shocks can influence investor sentiment and, by extension, cryptocurrency markets.
Given that, would you say that the upcoming halving is more likely to be influenced by these external factors, or will the historical precedent of increased value hold true?
It's a blend of both, Arya. While historical data might suggest a positive trend post-halving, the current global economic situation, including inflation rates, interest rates, and even geopolitical tensions, could all have a significant impact.
Absolutely, Luna. And let's not forget about the role of institutional investors this time around. Their increased participation in the Bitcoin market could either stabilize it or lead to greater volatility, depending on their strategies around the halving event.
That's a good point, Ethan. Institutional investors bring a different dynamic to the table. Their large-scale operations could magnify the effects of the halving, couldn't they?
Definitely. The entry of institutional investors into the Bitcoin market has been a game changer. Their investment decisions are often guided by different considerations than those of retail investors, which can lead to significant shifts in market dynamics.
And alongside institutional investors, we're also seeing a growing public interest in cryptocurrencies. The halving event has become more mainstream, and with that comes a broader societal awareness and potentially even more speculative investment.
It seems like the Bitcoin halving is setting up to be a pivotal moment in cryptocurrency history, with a plethora of factors converging all at once. Whether it leads to a surge in value or not, it's bound to be an interesting ride. With that said, how important is the concept of scarcity in driving Bitcoin's value, especially in light of the halving event?
Scarcity is a fundamental principle behind Bitcoin's value. The halving event, by reducing the reward for mining new blocks in half, directly impacts the supply side of Bitcoin. This artificial scarcity can drive up demand if the public's interest in Bitcoin remains steady or increases.
Exactly, Luna. And it's interesting to note that this concept of artificially induced scarcity is what makes Bitcoin somewhat similar to gold. Gold has a limited supply on Earth, and Bitcoin mimics this through its digital scarcity, making it appealing as a digital gold.
So, in a way, the halving helps cement Bitcoin's status as a store of value rather than just a medium of exchange.
Precisely, Arya. While Bitcoin can be used for transactions, its comparison to gold highlights its role as a potential hedge against inflation and economic instability, attributes that are enhanced by events like the halving.
And let's not overlook the technological and environmental considerations. The mining process consumes a considerable amount of electricity, which raises questions about sustainability. The halving could indirectly encourage more energy-efficient mining practices as the reward decreases.
That's an interesting angle, Luna. The sustainability of mining has indeed been a hot topic. It's fascinating to see how a financial event could have such profound technological and environmental implications.
Absolutely. And as we approach the halving, all these factors, the economic, technological, and environmental, will contribute to the narrative around Bitcoin and potentially influence its adoption and perception worldwide.
It seems we're at the cusp of a significant moment for Bitcoin and the broader cryptocurrency ecosystem. The halving is more than just an event. It's a testament to Bitcoin's evolving role in our global financial landscape.
Yes, and it will be fascinating to monitor how this event impacts the market, investor behavior, and the cryptocurrency's role as a digital asset in the coming years.
Agreed. The journey of Bitcoin is one of the most intriguing aspects of modern finance. I'm eager to see where this road leads, especially post-halving.
Well, I think that wraps up our discussion beautifully. Thank you, Luna and Ethan, for your invaluable insights today. To our listeners, the Bitcoin halving is a landmark event worth paying attention to, whether you're a seasoned investor or just curious about the future of finance.
It was a pleasure, Arya. Thanks for having us.
Thanks, Arya. Great discussion. Looking forward to seeing how it all unfolds.
And thank you, listeners, for tuning in. This has been Bitcoin's Big Moment, the Halving Countdown. Stay informed, stay curious, and as always, keep looking toward the future. Goodbye for now.